Hey, welcome to the live stream. Let's see what the market's doing today and see if there's any opportunities to get into some stocks. To evaluate stocks and look at their fundamentals. Sometimes stocks are popular, but I want to make sure they're valuable. But I want to make sure they're valuable. If you look at the best companies on the stock market, the most valuable ones, they all produce high free cash flow. High free cash flow. That's why I'm looking for high free cash flow. All the best investors depended on free cash flow and evaluating a company's ability to generate free cash flow. A company is not the stock price, and the stock price is not the company. They're two different things. Two different things. The big cap stocks have taken the show, but are mid cap stocks going to come back? Chinese stocks are exploding. The dragon has awakened in China. It could be the best trade we've seen in a while. AI hype is really interesting. AI is going to be interesting in the future, but is it really a business today? I'm going to pass on this stock. Just not enough discount, and I'm not really believing that they're going to grow as well as they should. Options can make your performance go a little higher every month and generate nice income. Listen to the great super investors. They are pretty generous with their knowledge and their wisdom. You just got to read their books and listen to their videos. Learn something new every month. In investing, you'll become a great investor. You'll build wealth. This is a buy stock. You're looking at a discounted stock, and it's unappreciated at this time. Don't forget about bonds. Bonds are a smooth, consistent way of earning a good return. And when stocks are really crashing, bonds stand up tall. Bonds stand up tall. You got to ring the cash register and take a gain. Defining when to sell a stock is a lot harder than determining when to buy a stock. And over time, you'll become a great investor and you will build great wealth. Hey everybody, welcome to my live stream. Thanks so much for those who've joined already. I appreciate it. Hey, welcome to the live stream. Heck of a day, wouldn't you say? Let's see what the market's doing today and see if there's any opportunities to get into some stocks. Let me shut off the music. Evaluate. All right, there we go. Back to normal. So it was a heck of a day today on the stock market. We had a lot of stocks just getting crushed, and I'm sure there's some stocks that you want to talk about. I was eager to get on. I usually don't have a live stream on Friday evenings for the East Coast and afternoons for the West Coast, but I thought, man, how could I not talk about what happened today? And we had a pretty good pullback just in the day. And what I hope it isn't is basically a sign of what's to come. It could be the beginning of a really, really big drawdown. Hoping that's not the case, but we got to just get ready for it. And today, if we look at the NASDAQ, it was down 2.2%. And the NASDAQ year to date now is up 1.1%. It's really had kind of a sideways existence in 2025. It's had its rallies and it's had its drops. And now we just had a nice drop over the last 2 trading days. It's down 2.65%. The S&P is probably faring a little better. It's up 2.24. And like a little bit like the NASDAQ, from January 23rd to this point, it's down 1.73. So really over the course of a month, the S&P is down. So that is interesting. And then the Dow, it got beat up today. It's up 2% for the year, but similar. For the last month, stocks haven't had an exact direction to go on. It's not like everything's moving up. It was almost like it was, certain spots are working, certain spots are not working. And, it makes investing that much more interesting, and really got to study what's going on. As I've mentioned in previous live streams, I was building up cash. I'm still building up cash. I sold early today, just slicing some shares off of my positions, even my position with Meta, which is my biggest position. I sliced some shares this week off Meta. I had $320,000 or so at the beginning of the week. And thanks to the stock market pulling it back, I'm now down to the upper 200,000s on Meta. But I did sell some shares. I'm up big on Meta. I just want to create some cash. But I sold shares in Google, sold shares in Robinhood. These are stocks that are cranking. Robinhood is doing so well. But I just want cash because this is expected. We're stock investors, okay? And when we look at the stock market, it doesn't go up perfectly in the straight line. It has these pullbacks that, they're not fun, but if we play them right, we make lots of money because you invest during these valleys and you get to ride up, the recovery. So again, I'm not sure if we're in a correction or not, but the year to date is telling me that, hey, the market's not convinced that stocks are going to go up. The market, I think, is concerned that we have some stocks that are too expensive. And I've talked about stocks that have been expensive. And notably, NVIDIA is going to announce next week. And that is a huge earnings announcement. Now, what I'm seeing in NVIDIA is that from June 18th to now, it's pretty much flat. So if you consider this stock has been pretty much for 8 months, it hasn't done anything. And this is the great NVIDIA. I think NVIDIA is awesome. And I started shorting NVIDIA right around here is when I started to really say this stock's, too expensive. So at that point, it's up 11%, but it kind of proves my point that, investors are finding it hard to bid up the stock. And NVIDIA has had a very good recent run. If we look at the year to date, it had a nice run from February 3rd up until the 20th. It went up 20%. That's a heck of a little rally there. But I think NVIDIA is going to have to put up an earnings announcement next week that is stupendous, excellent, magical. Put whatever adjective you want. If they just come in with a good report, the stock's going to drop. I don't think they're going to announce something terrible like, oh, we lost a bunch of sales. No, but I can tell you that this stock is really set. It has to be perfect or it's going to drop, in my opinion. We'll see how it plays out. Looks like Lardog. I don't know that I've seen you in a while, man. Good to see you. Looks like you are interested in PayPal, Qualcomm, and HG. So yeah, let's take a look at those. Qualcomm. And I'm not HG. Carlos, good to see you, man. Good to see you, Mike B. Thanks for attending. Appreciate it. And Michael Anthony, good to see you, man. So Carlos, good afternoon. What happened today? So let's talk about it. We're going to talk about that, Carlos. And then Michael Anthony, HLF. Let me take a peek. And Pfizer and HLF. Yeah, we'll take a look at those, Michael Anthony. And Debraj, thanks for joining. Again, you were an early bird. I appreciate it. So let me continue on just to open up things, and then we'll take a look at these stocks. And please keep them coming. Keep the comments coming, and we'll review all these stocks. All right, so that's what's going on. One thing that bonds are like really boring, just boring as heck, man. But when you see interest rates dropped, this is an interest rate drop across the board from the 1-year treasury up to the 30-year treasury. And that's a pretty good move. And what this means is bond prices went up. And that's why investors, especially investors at my age, 56, you buy bonds because these will move in the opposite direction when stocks crash. And when stocks crash, you want your bonds to stay nice and valuable so you can, spend that money. I try to keep my 5 years of expenses in bonds. That way, no matter what happens, if the stock market crashes for a while, I've got my bonds will probably rally during that time, and I got spending money for 5 years to figure it out. I don't think we would be in a 5-year correction. It's possible, but I don't think that's going to happen. Maybe a year or two. So bonds really moved up, and bonds did have gains today. I thought for a while that crypto was going to defy gravity and stay higher, but crypto went up to as high as almost, I think, $99,000 per coin, and it settled down to 93. Now it's back up to close to 96,000. That's pretty good. That's not bad. Ether came down 3.62%. So even crypto world got hit. So the pain was very democratic. Everybody seemed to have gotten a lot of that pain. Now, when we look at a heat map, it looks really red with a couple of exceptions. Looks like our friends in pharmaceuticals, they did well today. There was a judgment that Hims can't no longer, they were basically selling compounds that were a substitute for the weight loss drugs because there was a scarcity in weight loss drugs, and it was ruled that, hey, they can't do that anymore. So that's positive news for pharma, as well as when everything else kind of goes negative. Healthcare tends to be okay. Consumer staples tend to be really okay. And it did well. And then utilities tend to be good. Walmart, I think, is still dealing with the bad earnings they had yesterday. It was down big yesterday. It's down again today. And even Costco is down a little bit. I think there was concerns with the consumer, and it's been it was like a 2-day drop for Walmart. So there was a little bit of positive, and the other positive area was China. China went up today. BABA was up. My China ETF was up. So China stocks were up. Pharmaceutical drug companies were up. A couple like biotech was up. Consumer staples and utilities. But everywhere else, man, there was plenty of pain to go around. Notable names: Nvidia, 3.5%. Amazon down 3.11%. Tesla down big. Google's just been having a bad year this year to date. Meta had their 20-day win streak going, and boom, now they're on a 3-day losing streak. So hopefully they don't get all the way to 20 days of losing, because I will be very, very disappointed with that. These are my two most valuable stocks in my portfolio, Google and Meta being the more valuable of the two. And again, the pain, Palantir was down. CrowdStrike was down big. CRM was down. ServiceNow was down. Adobe. These are good companies, and their stock prices got beat up. The semiconductor space was down big time. So Joseph, very good to see you. Thanks for joining. So a lot of pain to go around. How deep is this thing going to go? I can't tell you that. We're on day 2 of a pretty good pullback. I mean, we've pulled back close to 3% on the S&P. It takes 10% to be called a correction. So we're 30% way, towards a correction. Now, we've already had all the earnings, the big ones behind us, with the exception of one, which is NVIDIA, which is this coming week. So what could pick up the market? I'm not quite sure. I mean, there could always be a real positive story, but I think the stories around stocks are getting a little old. The whole AI thing is getting a little old. We're not seeing killer apps, popping out where we're just super excited. Oh man, this one app is awesome. I thought the killer app moment was a couple of years ago when ChatGPT was announced, and people did get kind of crazy about that. Nowadays, there's 20 that are similar to that, and I don't know what your usage of those apps are, but I don't use them a whole lot. I don't think many people use them a whole lot. Microsoft put out their Copilot. It's kind of been a big flop. Apple went out with their Apple Intelligence, flop. So there's been some flops out there, and the AI story is getting a little tired. Like, where's the killer app? When's it gonna show up? When are we gonna have robots knocking on our door, delivering our DoorDash? We're years away, if not a decade or two away from that. So we'll see what happens there, because I think that story is getting tired, which is putting stress on the data center stocks. Data center stocks are, hey, let's build out the data centers because AI is going to change the world. Well, it hasn't changed my world, and I haven't seen a whole lot of change in the world due to AI just yet. But I'm not being cynical, by the way. I'm being very factual. I'd love to be corrected, but I'm not seeing the big change. So we will see. So that's the heat map there. Let's keep rolling. We look at the sectors, 11 sectors, all stocks get put into one of these categories. Materials is still leading the year at 7.75. Healthcare has moved into the number 2 spot. Communication services, thanks to Meta and Google not doing well, is down to 3rd place. This was leading the charge for a while. So next one is utilities, consumer staples. So everyone's still in the green for the year, sector-wise. But it's getting a little dicey. It looks over the last month, energy is in the red and industrials are in the red. Interesting. It looks like Zach joined. Zach, good to see you. Thanks for joining. And if you guys just joined, I've got some opening thoughts around what's going on with the market. If there is a stock you want to look at, please put it in the chat and I'll note it, and then we'll go over them. Looks like Joseph wants to look at VRT. And then Joseph wants to look at ANET. Glad to. All right. So from a sector perspective, it looks like material stocks, I think there was some stimulation to material stocks has been the tariffs. I think it made domestic producers more valuable. Also, precious metals have been doing really, really well. Healthcare, I showed how the pharmaceutical companies held their own today. So I think that's helping healthcare. And I think healthcare is going to do well in 2025. I've said that many times over the last couple months. We'll see how it does. And overall, I think both Google and Meta are fine. They're just so darn valuable, as well as Netflix and communication services here. Spotify, those are great businesses. I'm not too worried about that. All right, so that's what's happening there. The big, massive stocks, there's a lot of red on the screen. And these were kind of like the safe haven for a while. And they still may be, but Apple's down. NVIDIA is down substantially. Now NVIDIA is just barely hanging on to a little bit of green for the year. And Microsoft is clearly in the red. And I think that Microsoft's spending too much money on their data center. I said that in a video that I recorded after their announcements. Just too much CapEx. You don't have a business where that CapEx is, it's one thing to have a business that's putting out some revenue, and you can put that CapEx and say, well, I just want to make my operation bigger so I can sell more. They're not really selling any AI. So you're spending a lot of money on, like the Field of Dreams movie. Build it and they will come. Yeah, you're building it, but we're not seeing the killer apps. So you got to start putting up these AI apps or The market's going to continue to sell these stocks off. Amazon is now in the red. Google, out of the, I guess the top 6, is doing the worst. Tesla kind of takes the bag for the top 10. It's doing really bad. And then Meta, it's on a 3-day losing streak. It's still okay for the year, but last 3 days have been terrible. Tesla is down. Correction territory. This is a correction. Berkshire did okay today, and I think they're going to announce. So we'll see how that goes. Then Broadcom is clearly in the red. TSM, red day, barely hanging on to a gain. So when these big stocks, big market cap stocks go down, that's why the indexes are showing red. So that's what's going on there. We have some earnings next week, but I don't need to dwell on that. I think we're good on that. So looks like Hyper Wizard, you want to look at INTR. INTR. Take a look. And then Joseph, GEV, right? GEV. All right. So hopefully you guys pick a couple of stocks that just got shellacked, because those are kind of a little bit of, when there's a big accident on the highway and you're not supposed to look over there. Come on, just keep your eyes on the road. Don't look over there, but it's hard not to, right? So it'd be interesting to look at some stocks that just got shellacked. A couple of them got, put down pretty harshly, like Hims went down. And what's another one that really went down? Hims went down. New Holdings, which is one of my stocks, it got destroyed today. So we'll look at that one. PayPal, on a day like this, it was down 3.45. Yeah, it's a bad day. It could have been a lot worse. And for the year to date, these guys are down 12%. They have been, performing for the past year. They're having this pullback. I think this is a good stock overall. I think the stock is discounted substantially. Analysts think it's discounted by 22%. Has a nice low PE. This is a big business at $31.8 billion of revenue, but they keep growing their business. They keep getting bigger. I like the products and the assets they have, like Venmo. They have the crypto business. So those things look good. So PayPal is, I think, a good stock to continue to invest in for myself. When we look at their forecast, 27 analysts look at it. So there's plenty of eyeballs on this one. And they are looking at revenue growth is going to be consistent. And I wouldn't be surprised if PayPal acquires somebody, because they have the wherewithal to do that. And their earnings per share is going to expand faster than revenue, pretty much 2 times the revenue rate. They're going to expand their profitability. That looks great. So that looks really good. Their PE goes down over time. That looks great as well. So PayPal has to execute. They have to continue to really just out deliver based on what the guidance has been, what the market's expecting, and the stock's going to be fine. Let me show you where I calculate PayPal's discount to be. Let's take a look here. I think it's highly discounted because these cash flows are so darn big and valuable. Their cash forecast is basically here. You saw how they're going to be more profitable going forward. They're going to generate that cash, and that cash adds up really fast. I have reasonable growth rates on the first 4 years, as well as the terminal value, and the intrinsic value of those cash flows, $167 billion. $167 billion. Add cash on the balance sheet, which is more than their debt, and it's a equity value of $171 billion. So the market cap is very reasonable. So it's a very discounted stock if you look at cash flows. And cash is the way that most stocks that are really valuable, they're really valuable because of that cash. So that's why I think PayPal is a keeper, and I'm going to add shares of PayPal to my position. It's a really good company. I think the market's always looking for reasons to sell this one off for some, for whatever reason. For a while, it was a darling, and now it's a little bit out of favor. but I look at their business. I like their business. It's growing, and I really like their cash flows. So that's my review of PayPal. I really like PayPal. It's a stock that I own. I own plenty of it. All right, Sergio, good to see you. Thanks for joining. And it looks like, yeah. Okay, cool. All right, the next stock we're going to hit is Qualcomm. Qualcomm's a semiconductor company. So I don't know how it did today. It was down 4.81%. And that's a bad day, no matter how you look at it. Year to date, it's up 7.63. Over the 1 year, it's up 8.81. And this is pretty good considering that, we're having a pretty nice pullback. And for the last month, this one has somewhat followed the market. It's been kind of going flat for about a month. It's a $182 billion market cap company, $40 billion of revenue. Forward P is only 14. Very nice. It's a buy with a nice discount according to analysts. I also believe it's discounted. What I like about Qualcomm is they're growing nicely. You see that their growth is accelerating. If you look at the quarterly, we're going from single digit, low single digit, double digit, high double digit. That looks really good. And it's a big number they're growing on. So that growth is coming from a variety of products. They are really installed in a lot of phones, and they're installed in Samsung phones as well as others. So these guys are growing really well, and they have good profitability and good cash flow. So when I look at Qualcomm, I see kind of a very reliable, definitely valuable company. $12.7 billion of free cash. Their margins, 56% margins, good net profit, free cash flow margin, 31%. That's excellent. Excellent margin on cash. And overall, when I'm buying into Qualcomm and when I value Qualcomm, I calculate a discount. $74%. Again, back to cash. Cash is really good for Qualcomm. And why do I use cash? Well, when we look at these guys, I can drill into any one of these stocks, not including Tesla. Tesla doesn't have very good cash. But if I went into Meta, high free cash flow, high free cash flow, high free cash flow, ditto, ditto, ditto. It's that cash that makes these guys super valuable. It's the cash that allows Apple to buy back shares. It's that cash that really attracted Warren Buffett to Apple. Microsoft, same thing. Amazon, cash generation company, and they're really expanding their business. So that's why I depend on free cash flows. And Qualcomm, in my opinion, is discounted by 74%. So I continue to add shares of Qualcomm. I think the semiconductor space is out of whack. Why do I say that? Because semiconductors just been so expensive for the last 2 years, right? It's just really appreciated really fast. And in some ways it's deserved, right? NVIDIA had the GPUs, they're selling a lot of them. I get that. But I think it just got, way out of hand. And with that, the valuations are kind of wacky. And Qualcomm, I think, is a good buy for me, but it just may not outperform because right now you have some stocks that are really dropping, like Broadcom, NVIDIA. We'll see how they make it through next week. So this one's going to be a good buy, and I've got a good position in semiconductor. I've got a position in Qualcomm as well as Lam Research. Those are my two positions within semiconductor. So that is Qualcomm, answering the call on Qualcomm. Man, we got more people on the stream, 42 strong. Thanks for joining. It was a big day, man. Let's talk about it. And Joseph, Apple isn't using their chips. I think you're referring to Qualcomm. And that might be the case. I think they are still, but they're planning on getting off their chips. And they designed their own new chip, I think, for their less expensive phone. I think you're right about that. And then James Niels, good to see you. APLD. Okay, APLD. And Neil, just hang in there, man, because you've got like 10 people ahead of you. But I will cover it if you hang in there. And then Michael Anthony. People can live without tech, but food and drugs is what people need. You're right. Just don't ask my son that. He would rather take fast internet, tech, and he'll starve. But that's him. What's up, El Abdel? Good to see you. Thanks for joining. I think it's your first time checking in. I appreciate it. Yep. Good stuff, Michael Anthony. All right, let me get back on the list. Go down this nice long list of stocks, companies, what's going on out there. Here's one bright spot. Mercado Libre. It was up 7%. All right, go Mercado Libre. All right, one stock was up. They had great earnings, and that's why they were up. HG, Hamilton Insurance Group. We have looked at this one. Hamilton Insurance Group, through its subs, provides underwriting, specialty insurance, reinsurance risks in Bermuda and internationally. So it's an insurance company. It's tiny, 1.8 billion. What's it been doing? It's kind of been selling off. We looked at this stock, and I remember my opinion was that these guys have pretty good fundamentals, but I'm always a little nervous about small insurance companies because if you have a variety of bad events happen, it could really take these companies and they can go bankrupt. I mean, they could become insolvent if they have to cover too many claims. So that could be a problem. That could be a nice problem for an insurance company that they can't handle. So market cap's 1.8 billion, revenue 2.27 billion. Forward P is 5.32. How is that possible? How is that so low? Crazy. Analysts say it's a buy, discounted by almost 22%. And I like their growth. I like their growth a lot. Check out their growth, 68.9%. What's there not to like about growth like that? Very nice revenue growth. Nicely done. Very, very nicely done. And this could be, a good winner if they keep growing. Free cash flow looks good at 510, and free cash flow margin 22%, profit margin 21%. Those are excellent numbers. If I take this number, it's a small cap, it's a tiny cap. And, I could probably get to like 15 billion in market cap. And these guys are at 1.81. So this is a high risk, high reward situation. It's up 22%. Year to date, it's down a little bit. So this is kind of a high risk, high reward kind of situation. Right now, I'm invested in some insurance companies that I think are going to do well. Allstate's been a good horse for me. I've made good money on it. I'm staying in that investment. I'm going into Chubb. I think that's an obvious good investment for me. And I just don't have an appetite to take on a small insurance company. This thing could be a huge winner. I hope if somebody already owns this stock, I hope you tune in a year from now and say, hey, look, Hamilton Insurance is doubled in value or tripled in value. That might be the case on this one, but it is going to be risky. These are small companies, right? The smaller they get, the less predictable. We can turn a corner and bam, something happened. They insured a region that had a big catastrophe, and then they're dealing with it. So these guys are a little too small for me, but for the right investor that loves small caps, I'm a 56-year-old guy, right? If you're 26 and are a risk taker, this might be more up your alley. For me, I'm going to take risks, but they're going to be more calculated, and I'm going to try to cover with good diversification. I'm going to manage my risk. This one here is for another investor, not for me, but I like the company. I like their growth. I like their profitability, and I like their free cash flow. So that is Hamilton. Thanks for asking about Hamilton. Good luck. And again, if you make a ton of money, please come back and tell me about it. Tell me, hey, man, we looked at this stock a year ago, and look at all the money I made. I tripled my money. I quadrupled my money. I'd love to hear that story, so come back. Next one is Herbalife. Oh, man. This one was low last time I looked at it. It's up today. Amazing. Did they announce? No, they announced a couple of days ago. Last 5 days. Holy smokes. Man, 5-day run. Look at that run. Oh, man. This one was a super small cap. I looked at Herbalife, I don't know, last couple weeks. And I remember they were a really small cap and their stock price is still fairly low, but it was a lot lower then. It was around $5. But look at that, up 59%. Man, what a run. So they announced and their revenue's flat. Maybe they announced that, hey, we're going to stop losing sales. We're going to start to grow. And that really pivoted investors in thinking, hey, these guys are going to do okay. Their profitability did go up. So that looks good. Earnings per share really flew up. I think that's why investors got really excited about the stock. They do produce free cash flow. That looks good. Gross margin looks good. And overall profit looks good. So these guys are maybe turning the corner and are going to start to grow. It's still a small cap. It's a tiny cap. See if I can read one of these headlines. Looks like, it looks like their business has kind of found a little bit stronger footing. It's not contracting anymore. It's holding its sales number. So that's positive. They could just start to grow. They'll probably see their stock price really go up. And I think it's positive for them to have their stock price recover. If it can get back to like $10, $20 a share, it just gets like more marketable to the market, because if you have a really low stock price, immediately investors are nervous about it. Why did it get to $5 a share? Why did it get to $3 a share? So now that they're $8 a share, if they can get up even higher, I think more investors would be willing to invest in them. I know that when I looked at Herbalife a couple of weeks ago, I was like, man, I can't buy a stock that's like $5 that's had a really troubled past. Look at this chart. It's just been going down a mountain. It's been going down a mountain road with no brakes, hoping it doesn't go off a cliff. And it's really landed at $8.31. But at one time, it was a $50 stock. Just 4 years ago, it was a $50 stock. And now it's $8.31 stock. Now, this isn't a business that I'm in love with. These guys do what is a health and wellness product. It's a powder that people will mix with water. And I think it does have some nutrition in it, and people will ingest it. And this is a company that relies on multi-level marketing. So there's kind of people, they have independent sales agents that attract more sales agents, and they have, basically that type of sales environment. It's not the right business for me, maybe for somebody else, but not for me. I like to really believe in the business where possible. And this is not one that I believe in. I think at some point, I think people are going to stop using the product, is my opinion. But look at them go. For the last year to date, these guys are up 24%. But for the 5-day, it's up 59%. That's incredible. Wow. Thanks for bringing this one up. Is anybody invested in Herbalife? Any thrill seekers out there making a bunch of money over the last 5 days? I'd be curious to know that. All right. So that is Herbalife. Now, let me catch up on comments. So El Abdel, we went over Qualcomm. The industry is booming, and it's just a little expensive, but Qualcomm, I think, is discounted really nicely. You tried to tell me to buy under $6. Man, I got to start listening to you, Michael Anthony, but it's just not the right stock for me. I made a lot of money last year. I'm nicely in the green this year. I'll stick to my recipe. You stick to yours, man. If you know how to pick companies like Herbalife, you keep doing what you're doing, man. And you keep bringing those comments here. Wow. Good for you. Nicely done. Drop the mic. Way to be making money. Interesting. I don't know about HFL. Yeah, these guys have come with some bad press, I would admit. There was a documentary where who's that investor? Bill Ackman. He shorted them and he went after them and he created this. There was this documentary created around it. So I'm not into Herbalife. It's just not the right stock for me. All right, but congratulations, Michael Anthony. Have a nice weekend. I'm glad somebody made a lot of money today. All right, cool. And yeah. Yeah, I think the shorts, if they're getting squeezed, they're probably buying shares to cover. You're right about that. Interesting. Cool. Very good to see. Well, I'm glad you nailed that one, man. Congratulations. Congratulations. Now let's talk about big pharma. Let's talk about Pfizer. So Pfizer, big pharma was up today. Man, slight miracle to see stocks that are up. Now it's a big miracle to see this, right? Hoo-hoo. But these guys are a little more modest. They're a giant company at 149 billion, $63 billion of revenue. They pay a nice dividend, 6.54. If there's any income investors out there, check this out. 6.54% dividend. That looks really good. And analysts believe in the company. They think it's discounted by 21%. I also believe in the company. I think they're really made a turn. And see, they had some red here because they were coming off COVID years when they sold a ton of vaccines, but they don't sell vaccines anymore because we're over COVID. So there was negative. There was a contraction because they weren't selling vaccines. But now we're seeing that this company is actually growing. It's 31% growth in Q3, 24.6 in Q4. If they keep this up, they're going to be a mid-20s% grower with a big revenue line. That is going to be stupendous, in my opinion. And they generate very good free cash. They generate very good profits. So when historically they've generated great free cash, and we look at their margins, really good margins. So they've taken on some new, with the money that they made from COVID, they acquired some businesses, and I think they're having some ramp up costs, which is why the margins dipped. But once those businesses really start cranking, this company is going to stay a grower for a couple of years. And that's what I'm betting on when I look at Pfizer. I am really liking what I'm seeing with Pfizer. I've been following the company for some time. So this stock for year to date is doing about 1% lower. And for the 1 year, it's down 5%. But it has had glimpses of really catching, like more recently, really going up. And I think it's a good place to be. We're seeing that if technology, suffers a lot of these, drawdowns, it's going to be a logical place for investors to go to pharma, to healthcare, because healthcare and pharma, it does okay whether we're in a good recession, or we're in a good economy or a recession. If you're in a recession, you need drugs to stay healthy, you're going to get them. If you're sick and you need drugs from Pfizer, you're going to go buy them. And your health insurance will cover them. So I'm really big on Pfizer, and analysts believe in the company. Let's take a look at that. So 13 analysts cover the stock. Some analysts are really, really bullish on it. And the worst case scenario is you just lose a little bit. So overall, there's a nice discount available of 21% on Pfizer. It looks like revenue for the current year is, and I don't think these numbers, I'm not believing these numbers because I just showed you the revenue growth that we saw. I think they're actually going to grow better than that. So I'll just skip on this one. They did advance their profitability really nicely up to $3 a share for the coming year, which looks really, really, really good. Let me take a look at the valuation that I have for Pfizer. And what you're seeing here, I know there's a lot of new people on my channel. I created this model in Google Sheets. It really just takes the principles of discounting a company's projected cash flows to today's value, using a discount rate that should be applied to the company based on the risk of that company. And that would give us a net present value of the cash flows that I project for this company. That net present value, you can see the formula here. If you took some finance classes or really dig mathematics, you know what net present value is all about. And it discounts the value of all those cash flows to today's value. I add cash and take away debt, and I get to an equity value for Pfizer of 188 billion, but that's higher than their current market cap by 26%. Combined, I think that Pfizer's discounted by 30%. When I look at earnings per share, and here's the formula that I use there. Again, if you're a finance geek or you just love math, here it is. You can build this on your own, or if you become a member, boom, you get access to this model and you can play around with it. I would gladly give you a copy or give you access to a copy because it's a Google Sheet. So earnings per share is $2.97. I'm giving them just a reasonable PE of 12, growth rate of 1%. It's 37% discount. So this guy here, I think, is going to do well. It's a nice, reasonable risk stock with a good return for me. This is a good stock for me. I'm 56. I think I'm going to do well with Pfizer. And it's a really good, steady stock. So that is my review of Pfizer. Thanks for asking about Pfizer. Next one up, let's go to VRT. What's going on with VRT? Before we do that, let's talk about a crash and burn victim. This stock was brought into the emergency room. It is New Holdings. This is one of my holdings. Holy smokes. It's down 18.89%. They announced their earnings. The market did not like the revenue came in below expectations, in part because the foreign exchange really had a negative impact on New Holdings. So it really crushed the revenue. Well, in my book, they executed their business really well. They actually attained more customers at a very high rate. So I really like that. The management team in the company performed really well. So I actually bought shares today of New Holdings, but the market just beat up this stock. I think the stock's discounted. I think it's going to come back. It's not the first time that the market sells this stock off and then it comes back, sells it up, comes back. This is like one of those tough fighters, man. It gets knocked down, it comes back and wins the fight. It just got knocked down again, though. And this was a pretty good knockdown. Now, I would say on a day like this, when it was really down, it probably exaggerated, New Holdings, the drop. So we'll see where it comes back. This is a pretty good market cap company. It's 51.8 billion. It's not like a tiny cap. So a lot of investors are invested in here. And I like the regional coverage here. These guys are in Latin America. They're covering Latin America really well, which is a really high growth area of population. And a lot of people are unbanked down there. So this is the first time they have a banking solution and they're using New Holdings as their vendor. So that happened today. I thought I'd cover that one real quick because that is one of the big losers of the day. Oh, man. Oh, well, let's move on. So we're going to go over VRT. What is VRT all about? That is Vertiv, down 8%. Vertiv is year to date, it's down 15%. It's had kind of some bad days. Over the last month, it's down 29%. Now, Vertiv is a stock that I've covered multiple times on my channel. Vertiv Holdings, together with its subsidiaries, designs, manufactures, and services critical digital infrastructure technologies, lifecycle services for data centers. These are all fancy words for they put a lot of the components in a data center. And when you look at their actual product, let's look at it together. Because I think when people hear data center, we're like really impressed. Like, whoa, data centers, right? That must be like, super impressive, stuff like, really good computers and stuff. But let's drill into the product itself. Uninterruptible power supplies. That's not high tech. That's like peripherals. No big deal. We've got power distribution. It's electrical. It's switching gear. These things have been around for 50 years. Okay. Cooling. Okay. Cooling is plumbing. Okay. Plumbing and pipes. I mean, we go to Home Depot and buy this stuff. And so rack systems, trays, these are like cabinets. These are like steel cabinets. So yes, these guys are in the data center, but think about the product that they're selling. It's not like NVIDIA. NVIDIA, I bow to the greatness that is NVIDIA. They created a GPU that's the fastest GPU on earth. Okay. That's why they're using it to build AI, large language models, because it could accelerate the compute and get those large language models built faster. These guys are kind of a commodity play, but they got caught up in the data center story, that, the AI story and so forth. And let me show you their financials to prove a point. So they're growing. It's not an incredible growth rate. It's 16.74%. You want to see incredible. Let's look at the king of the data center right now. That's NVIDIA. This is incredible. This is like incredible. NVIDIA, you guys are awesome. Okay. So that deserves like applause. 16%. Okay. That's pretty good. That's pretty good, but it's not like incredible. And when we drilled into the product, well, I just showed that I don't think the product's all that like, valuable. And the margins tell me that too. Gross margins of 36%. That's not very good. Net profit margin of 6%. That's terrible. So why is everybody valuing that company so high? NVIDIA, the king. Gross margin 75%. Profit margin 55%. Holy smokes. Man, these guys, is this legal to have that kind of profit? It sure is. This is America, where entrepreneurs that have the best ideas get rewarded. Back to these guys, you have very low margins, not very profitable, not very good free cash flow, and they're growing, but they're not growing, at the rates that NVIDIA or really incredible companies are valued. So when we look at Vertiv, and I'm going to switch over to this guy, I'm going to switch over to Google because I like their graphing here. We see that his stock got caught up in the data center and it flew up, and it 11x'd. It's like, no, this company, with all due respect, should not have gone 11x. And in my opinion, this thing is going to crash down to $25 a share, $40 a share. We'll see where it ends. But as soon as that data center slows down, these guys are going to be hurting, or at least the stockholders are going to be hurting. From the peak to where they're at now, it's down 37.46%. That was a little bit expected on my part. I've done videos. You can time check me. I've been doing videos on Vertiv for 6 months. I started doing videos around here. It had a correction. It flew up, and now it's flying back down. And, I'm seeing these stocks. I've lived through the dot-com bubble, and I was much younger then. I didn't have the knowledge and, awareness that I have today. But this really reminds me of that era, that these companies, for just being caught up in the story, are really being bid up. And I think it's really risky long-term for the investor that thinks, hey, I'm going to buy here expecting to stay there or maybe to go up, and then they lose money. And if this thing becomes a falling knife, it comes down to $25 a share or so, man, that's a big loser. And you think that can happen. It happens to even the best of companies. For example, we know that, let's say, Meta is a good company, but the market, it either goes up way too high or way too low. And Meta was being criticized because the metaverse wasn't working. So the market said, you guys are terrible. We're going to discount you by 76%. This happened less than, about 3 years ago. And Meta got sold off that harshly, and then it came back, right? So this is what the stock market can do. It could really take a stock down. It could really take a stock up. Now, I believe Meta has the fundamentals to support this stock price. So that's not what I'm saying out of Meta. What I'm saying is this can go up and it can come down, just like you saw with Meta. Meta is a quality business with huge margins, Vertiv, small margins, small profit. And this is probably not going to end well, in my opinion. So that is Vertiv. Thanks for asking. So I see a lot of comments coming in. Please bear with me. I am a one-man operation trying to go down a list of stocks that you guys, you investors, want to take a look at. I've got what looks to be 6 stocks to go here. And then I'm going to check the comments. If you want me to look at a stock, please put it in the comments. I will look at it. We will take a look and see what we got. All right. So ANT. So I just did a short on ANT, Arista Networks. My conclusion is this stock's a little expensive and it's beginning to really come down. And this, again, I like this tool because it gives me the ability to kind of show where the top was and how much it's dropped. So from the top to here, we're down 24%. Arista Networks is a quality company. There's companies that are high quality and still get priced too high. So this is a solid business, but for 5 years, this stock has been going up. And at some point, it just surpassed its true value, its intrinsic value, in my opinion. And when I look at the fundamentals behind them, I see that, they're a good grower, but not an incredible grower. I showed you incredible, right? NVIDIA, that's incredible. Or Coinbase, it grew more than 100%. That's incredible. In 1 year, boom, grew more than 100%. These guys grew 19.5, and they're not the biggest company in the world. When you buy Arista Networks, you are paying, what is that? How many times revenue here? So we are going up 10, close to 20 times revenue. That's expensive. Forward P 39.37 looks expensive. Again, they're growing at 19.5%. That's not stupendous growth. So their revenue is getting bigger, so it's slowing down a bit. Looking at the quarterly, it did accelerate in the last quarter. That looks good. But I think they guided that they may have struggles growing in 2025, and that's why the market is reacting the way it's reacting. Free cash flow, it looks good, but I cannot get to the valuation where they're currently at. The cash flow is just too low. Gross margins are fine. Profits are great, but their free cash flow is just not very high. Call it 3.7 billion in the trailing 12 months. And their market cap is at 124. So the best I can do is probably get to like 80 to 90 billion in market cap. And that's by multiplying it by 2025 and multiplying free cash flow times that number. And they do have good cash on the balance sheet, 8.3 billion and only a little bit of debt. So that adds to the value. So maybe we get to 90, 100 billion. So it's overpriced by maybe about 20%, maybe 25%, but it's still overpriced. And this is just not the good risk to reward ratio that I'm looking for. I'm looking for something that's going to double over the next 5 years. And I think the best years for Arista are behind them. I think the stock may struggle just to go up again, or maybe just go sideways. And over the next couple of years, I think this one's going to underperform unless something drastic happens that all of a sudden they start growing revenue, which I doubt. This is Arista Networks. These guys do data-driven client, networking. Networking equipment is infrastructure. And it isn't like we're building a ton of infrastructure. I get that data centers growing. I acknowledge that, but it's not growing stupendously. And you can see that, these numbers are good, but they're not great. The reason they have a high growth rate compared to like a Cisco is gigantic compared to this. So it's hard for them to show high growth because they have such a large number to compare to. So Arista Networks in my book is a sell. I think it's priced a little too high, and it's had a great run. Congratulations. If you bought here, you're sitting on a really, really nice appreciation. And I think Arista Networks is a great business. Just their stock price is too expensive. All right, let's move on to INTR. So INTR, never seen this stock. Let's see here. Inter and Company, through its subs, engages in the banking and spending, investments, insurance brokerage business. The company's banking and spending segment offers banking products, services, including checking accounts, cards, deposits, loans, and advances, and other services. Does debt collection, foreign exchange, financial services. And this down in Brazil. Okay, so where is this? Yeah, this is a Brazilian company. Okay. So it's out of country, and so it adds a little bit of risk. It's a very small cap, 2.29 billion. Revenues at 743 million. This is in USD. Okay, good. US dollars. They pay a dividend. Forward P is 9.67. It's a strong buy with a 40% discount. It's doing well. Over the 1 year, it's not doing well. Over the year to date, it's doing very well. It caught a rally. It announced on February 6th. Looks like the market really liked what they heard. They're growing really well. Okay. And did they sell off? See, they sold off today. Over the last 5 days, they've kind of held their value over the last 5 days. That looks pretty good. All right. So these guys, they're growing nicely. They are small, right? They're a smaller company. These guys probably compete with New Holdings. And I think to some extent, Mercado Libre, they're doing financial services, but not banking. New Holdings would be their competitor, amongst others. They're growing very nicely, very good. This one here is just a little too small for me. It's doing well, but you could see that over the last year, it didn't do well. So I'm going to stick to New Holdings. And this one here, what I would point out is you want to look at earnings per share, which is important. And you also want to look at the book value. So we'll look at the book value next. And these guys are supposed to, only 3 analysts are covering it. And the analysts are really optimistic about the company. If their growth is expected to slow down a little bit, but that's because the numbers are getting bigger. They're still going to expand quite nicely, and they're going to expand their profitability. This isn't the Brazilian currency, which is going to be a fraction of these numbers. When we look at book value, you want to see that banks specifically continue to expand their book value, because that's kind of the way banks get valued, is based on book value, price to book. And their book value has expanded over time. I mean, it really went up. And this is, what currency are we looking at here? So this is the Brazilian currency. But I'll let you kind of calculate it on your end and figure out what the book value is in US dollars. The good news is that it's really expanded. You see, it went from 1 Brazilian real, I believe, to 17, 18, 20. So it's really just shot up. Pretty impressive. But they are a small company. These small companies, see, this here, just to manage my risk, right? When you leave your home country, the US, right? This is where I've been my whole life. And this is where I got educated. This is where I worked and so forth. Well, Brazil, I'm not very familiar with. I know it's a big country down in South America, but as soon as I start investing in Brazil, risk goes up. I want a higher return. And then we're dealing with a small company, risk goes up. And at that point, I kind of tapped out. I'm like, that's too small. I have to really know this business, or I'm willing to take a really big risk for a very big return. I'll let somebody else do that. I need to manage risk and not take overly high risks on a stock like this. So that's that's the zone that I stay in based on age. If I was a younger guy, like mid 20s, mid 30s, maybe I would take a risk like this, but I like to really know a business, especially if it's this small, and really be able to bet on it. I made really good money on a really small shipping company by the name of Panel. I started investing in them when they were tiny. And man, I four-bagged that investment, sold, very happy. I've made money on small caps, but I have to really study them. And that would take me probably about an hour to get through this one. Instead, I'll give it to the person that asked about this. I would just tell you that I see a lot of positive things here, but just be aware if you're a US investor like myself, you're taking a higher risk by investing in a stock like this, which you probably already knew. So thanks for asking about INTR. Let's move over to GEV, which I believe is it General Electric? Verona. What's going on with this guy? So year to date, it's pretty flat. So gotta hit this guy again to see what we're really dealing with here. Let's look at the last 6 months. So I had a peak and now it's down 25% down from the peak. This is, I believe, a power company, right? Yeah, energy company engages in the provision of various products to generate, transfer, orchestrate, convert, store electricity in the US. So they're a $90 billion market cap company. This has certainly been appreciating 185% over the 1 year. And they just IPO'd, I guess, man, was it less than a year ago? Yeah, looks that way. So it's coming up on its anniversary, maybe in a couple months. So really impressive. The stock's gone up. When we look at their growth rate, and we'll look at the quarterly, this is the growth rate on the quarterly, 5%. Again, when I look at charts like this, I'm like, wow, their revenue must be really exploding. Well, 5% is not exploding. It's kind of like, what? how come the stock's worth so much? I thought the demand on their product is super high. Can't they double their price? Can't they expand their margins? Nope. This is utilities. So I'm unimpressed with the revenue growth, which is my biggest problem with this guy. And then we get down to free cash flow, very low free cash flow. The free cash flow margin's low, profit margins are low, gross margins are low. It's like not very good profit, not very good growth. So why is this stock so expensive? It's because there's a story out there that we are going to need a lot of power for the data centers. But what's interesting is, well, why isn't the revenue going, sky high for these guys? Why aren't they like making money hand over fist? I don't know. Maybe we don't need all that power. Maybe the whole DeepSeek story of, hey, they have a technology that's going to take less power to deliver AI to the user is really going to happen. That's what happens in technology is you have innovation after innovation. We keep making technology better and less expensive. The iPhone's coming out from Apple. It's going to be less expensive. And I think it's going to be a better device, most definitely better device that I'm holding or is on my desk that I paid $1,100 for a couple of years ago. Now I spend $700. It's probably going to be a device that's 10 times better. That's what happens with technology. And these companies are being bid up like they're going to have a monopoly on generating power for the data center. I don't believe in that. To me, it's amazing that many investors are in it, but they are. And that's what makes me nervous about today's market is seriously, people are spending that kind of money on this stock when it's doing this. It's unimpressive. You can keep telling me stories, but I like looking at fundamentals. Fundamentals I believe in. Stories, not so much. Some stories are interesting. Oh, that's interesting. But fundamentals are fundamentals. These fundamentals are what the management team has to report. If they don't report them accurately, they lose their jobs. They could even go to jail. So they report honest numbers. So GE Verona, needless to say, I think is overly priced by a substantial amount. The best I can do literally is get the valuation up to like 20 billion and they're up to $90 billion. Most IPOs follow a really harsh curve. I think one that we were looking at this morning, I know this is the case for Robinhood. So these stocks, they IPO, they come out of the gate. They're going to change the world. They're awesome. And come on, there we go. And they crash and burn. They usually do this. And then they come back at a later date and they do well. Okay. So the good companies. So this might be the curve that stock follows, GE Verona, especially since, we're having a little bit of a uh-oh moment. Like maybe the stock's too high and it's beginning to sell off. We'll see. We'll see. This coming week is going to be huge for NVIDIA. I mean, the whole AI story, data center story is on the back of NVIDIA. If they come out and say, sorry, we're not going to grow as fast as everybody wants us to. I mean, you're going to see red. You're going to see deep, colorful reds for a while in that space. All right. We got through GEV. I'm cranking along here. Let's go to Hims. Hims had a day, 25% down. Whew. The courts decided, we're going to respect patents. And the patents are owned by two companies, predominantly Novo Nordisk and Eli Lilly. They're the ones that have the patents on the weight loss drugs. Hims was allowed to operate mixing compounds and selling them because there was a shortage of those weight loss drugs. So it was deemed an emergency that, hey, if a pharmaceutical company cannot produce the demand that the market has, other companies are allowed to sell that product because the FDA is like, look, we can't have people that need drugs waiting for the manufacturer to produce them. If somebody else can produce them, bam, they can do it. So now that the shortage is gone, this is supposed to be a revenue loss for our friends at Hims. And it wouldn't be a big deal unless your stock was up 412% in 1 year. And it's just been really cranking. This stock has just gotten way, way too expensive. Oh, man. And it's a cool party when stocks go up like that. Short interest, 26%. I guess the shorts are winning this battle. They are winning the day. There's a lot of short sellers very happy today. Going, man, that was cool. That was fun. That was great. These guys are growing really well. But again, good part of their mojo is going to be taken away when they're not allowed to sell some of those weight loss drugs. So they're going to be left with selling their other catalog. Now, these guys, I have a valuation on Hims, and the value is nowhere near their market cap, but it's not too bad. And I didn't even include, FYI, I'm not even including the decrement of the weight loss program. If they lose that program, that's pretty good dent in the revenue. And then my numbers would be too optimistic. But even at today's stock price, the stock's overpriced by 52%, in my opinion. So that is Hims. They had a really, really rough day. Rough day at the office. Rough. Now let's take a look at our friends at Apple. So Apple's been kind of going sideways, and this is a stock that impresses me because they keep going up in value. It's like, how does a company that has no revenue for coming up on 3 years appreciate like this? It's name brand. It's Warren Buffett's in it. They know how to buy back enough shares to create scarcity of their shares. I get that. That's a little bit more engineering. That's financial engineering. It's not, hey, we have the coolest product. We are making our product better. We're creating new products that are just fantastic. Apple completely flopped on the Apple Car, which was a dumb idea to begin with. And then they came out with those headsets that cost like $3,500. Dumb idea number 2. Where are the ideas? Well, I tell you, their co-founder, I should say, Steve Jobs, he was the ideas guy, and they don't have him anymore. Now they have a professional executive in their current CEO. Great guy, but he's not an ideas guy in a technology company. NVIDIA, their founder is still with the company. They're kicking ass and, they're kicking butt and taking names. Microsoft, I think, is somewhat of an exception. The founder is gone. Who retired. He's the chairman still, and they hired a really good CEO. And on. Like Meta, they're doing really good, and they have their founder there. So the ideas are just lacking in Apple. We'll see what happens. This is going to be interesting to follow. For the year to date, these guys are pretty much a little bit down, but it's just been incredible that they've been able to rise, even though their business clearly, based on fundamentals, is in trouble. And now they're coming out with a less expensive phone that is going to enable them to sell more units, but at a lower price. So instead of selling a unit at $1,100, you sell it at $700. All right, you're going to have to sell more units just to get back to the revenue number that you once had from those units. So we'll see how things play out for these guys. And then internationally, Apple is feeling the competition from Huawei, Samsung, and I forgot the third. It's a really tough name for me to pronounce. It's Xiaomi, starts with an X. They're doing really well. So Apple's feeling it from all kinds of, sides. And this is going to be an interesting stock to look at because this is the most valuable company on the stock market. Super interesting to follow. That'll be my soap opera. That'll be my Netflix show that I can binge watch is that particular stock. APLD. Applied Digital. What do these guys do? Applied Digital Corporation designs, develops, operates digital infrastructure solutions and cloud services, high performance computing, artificial intelligence industries in North America. It operates 3 segments: data center hosting, cloud services, high performance computing hosting. Okay. 150 employees. I get what they do. They are doing very well. Wow, look at that. 24. So they were really rocking back here. They dropped in value and then they're back. All right. 2.37 billion small cap. 211 million. Boy, they're losing money. They're good at it. They lose more money than they have in revenue. How is that possible? We'll take a look. So obviously these metrics can't, they don't get calculated because you're in the negative. It's a strong buy, 13% discount. It's still moving up. It moved up today. Okay, interesting. And the revenue is growing nicely, but it's tiny, okay? Keep in mind. And part of why they're so unprofitable is they're probably putting a ton of gear in these data centers, and this is expensive stuff. You don't have high performance computing with, cheap stuff. You have to buy GPUs from NVIDIA and all the really good stuff. So they're losing money. They're burning money. They're burning cash left and right. Can't burn it fast enough. But all kidding aside, the revenue is impressive. Let's take a look at their balance sheet, which is going to be important. And when we look at their balance sheet, they have $286 million of cash and they have $799 million of debt. Okay. Houston, we have a problem. These guys don't have a lot of cash and they burn cash. They burn it faster than you can imagine. They're burning it at $445 billion are being burned every year. That must be some big bonfire. So my concern is, at what point are you going to run out of money? Will you have to issue out shares? Have they been issuing out shares to try to drum up some cash? Now, issuing out shares may be acceptable, but it liquidates the company among more shareholders. So where's my share count? So here's a share count, and that's exactly what's happening. So the share count has been going up. So they're liquidating the company. Temporarily, is it acceptable? Maybe. But just be aware. The share count keeps going up. So the company is owned by more shares, and at the same time, they're burning a lot of cash. This is not an investment I can make. And keep in mind, so high performance computing is not a unique ability. AWS from Amazon can do it. Microsoft Azure can do it. Google Cloud can do it. And those guys have a ton of money behind it. They can spend money on it. Like Google in their cloud business announced that they were one of the first data centers to get the new Blackwell chipset to operate in their data center, as an example. So these guys are going to compete against the likes of Microsoft Azure, AWS, and Google, 3 of the most valuable companies in the history of the stock market. Good luck. You're really going to need it. This is going to be interesting to follow. I'm not going to follow this company. I think I don't know. I think this one's going to end poorly. That's me. And I'm not a chicken. I'll take some chances, and I'll show you a couple examples. But that's what I'm seeing here. I'm seeing a lot of risk. I like to see risk reward ratio, and I like to know who are you guys going to compete against. Oh, AWS, Microsoft, and Google. Oh man, you couldn't pick 3 stronger competitors. It's just like there's no way. So good luck, Applied Digital Corporation. Thanks for asking about this one. These guys are being really, really carried by the whole expectation that, hey, AI is going to be big, data center is going to be in high demand. But boy, these guys are going to need to have everything go their way just for them to make it, because they're burning so much cash. We will see what happens there. All right. So I made it through the list. Now I can check comments. Thanks so much for hanging in there with me, guys. You guys are awesome. We're 59 strong on the live stream. Let me try to pick up where I left off. And I tried to go through that as quickly as I can. And let's see here. Where are we at? Lunar's coming up. Oh man, I like looking at that business. There's nothing like seeing a wild, interesting business. So we went over HFN. We're good there. Michael Anthony was telling me about all the money he made on HFL. Congratulations, man. That is great. So on Pfizer, you're holding shares. Average cost of $26. Okay, cool. Very good. Very good. Josh, good to see you. So you got some Pfizer as well? Yeah, healthcare, I'm thinking healthcare is going to work this year. I think it's a good place. I think a lot of smart money is moving to healthcare. So a little more Pfizer. Yep. J&J is right there with them. J&J is high quality. And I think it's been kind of left behind this big bull run we've had for 2 years. Very good. So Sabir, you want to look at XYZ? All right, let me note it. And then can you on Intuitive Machines, Lunar? So it's the symbol's Lunar, right? Okay, we'll take a look at that. Josh, I remember got stopped out of Zuckerberg on Meta comments. Cool. And then Rex, Lunar, Intuitive Machines, and SpaceX launched to the moon on the 26th. Really? That sounds exciting. So they're going to the moon. Man, did I miss that? I didn't know we were going. Somebody was going to the moon. Look at Fubu. So Fubu's, I think, getting acquired, right? So they should be kind of like the big news is behind us. We'll take a look. We'll take a peek. So did you make some money on Hims? I did not. Nope. And I'm not shorting it, so I'm not on either side of that equation. Hopefully somebody on this stream made lots of money on Hims. I think certain tech must hit major support or... So you're talking about AT&T? AT&T's having a good year. We'll take a peek at that. PAGS down in Brazil. That's right. I looked at PAGS a couple of weeks ago, and they looked okay. They didn't look as good as I would have wanted, but let's take a look. Maybe I'm remembering the wrong company. So Lunar goes to the moon on the February 26th with SpaceX. What do you think? I think that's freaking awesome. Let's take a look. That'd be incredible. All right. So Joseph, I own some GEV at $353, right? So none of this is financial advice. We're just going to look at this. But none of this is financial advice. Yeah, I shared my comments before I knew you had shares, and if you need to replay the recording, you'll have access to it. And good luck. Good luck. All right, so Michael Anthony, dude, I love your comments. So you watch that ETF and it kind of tells you what's going on with Brazil, huh? That's a good tip. Thank you. So CEG. Let's take a look. Hood can fall back to $30. It could. I don't think it's going to. I still think the stock is discounted. And this one's been a good winner. It's a stock that I own. It's falling back, but I actually think, and you can go back to, I mean, you're not going to, you don't have to. I'll just tell you what's in them. I've been doing videos on Robinhood. I was really optimistic on the company. I've been optimistic on the company for a year and a half. And I still think they're discounted even at this stock price at 32%. I'm up on the stock big time. So I actually sold some shares today just because I want to lighten my share count and create some cash. But this has just been a super winner. They generate cash. They're growing. They're clicking. They're in the right spaces. Now they're going to put gambling on their website. They call it something else. They try to make it sound like, no, it's not gambling. It's this other thing. It's gambling in my book. I'll let the Robinhood guys wordsmith it and say, oh no, it's this other thing. And, but we all know it's gambling. All right. Back to the comments. Stock Talk with Jay. What's up, man? Every dip has brought so far a very different this time. GDP. Could be. I know that the inflation going up, not a giant surprise. I mean, and that is the biggest concern because that moved out the rate cuts. But it really did, like, I think the Federal Reserve lost confidence or lost credibility in the market because they had a big rate cut like 2-3 months ago, 50 basis points. And then we come up and get this inflation report. It's like, guys, why did you cut like 2-3 months ago? You should have just stayed put. Just keep interest rates if you would have kept interest rates where they were, it would have made more sense. But then you cut 50 basis points and now you may have to raise or wait longer before you cut interest rates. So I agree that the economic data is not perfectly aligned with or it tells us a whole lot. I think it's been a mixed bag. Sergio, good to see you. Josh. All right. So I'm going to kind of read through these comments and try to get to the symbols that we want to go over. We went over HFL, Lunar. We're going to talk Lunar in a little bit. Xiaomi, we went over Xiaomi this morning, I think this morning. It's really good company. I'm invested in it through an ETF. It's a Chinese company. Looks really good. Thanks for bringing that up, Sergio. I'm glad. And I think you told me that those guys are selling in Europe. Yeah. Thanks for bringing that up, guys. Appreciate it. Yeah, man. China is beginning to work. It's been working in the month of February for sure. Hopefully it keeps going. AP. Yeah, agreed. Yep. Cool. And I mean, Nvidia has an investment in them. We'll see. We'll see if it works out. All right. So I went over APLD. We're talking Lunar again. Rex Turner. RXRX. Oh yeah, that I did hear about that one. I think that's one of the AI companies for healthcare. Kevin Lopez, GRRR. I don't know what that one is. We'll take a peek, see what it's about. Rotel and Cheese. It's been a while, man. How you doing? SN. Cool. Okay. And look, I'm reading through these guys. If I missed your symbol, please put it out there again. Please don't take it the wrong way if I miss yours. I'm right here at SoFi. If you're above this SoFi comment, please post it again. Remind me what you want me to cover. All right, SoFi. Yeah, we can cover it. You're in line. We got 9 stocks on the board. So Redwire Corporation, RDW, Khalil. Wingstop, man. You know, the problem with Wingstop is I'm getting to the dinner hour and I'm going to talk about Wingstop and I'm going to get hungry. But let's do it. And I did look at it not too long ago, but I will tell you more about it later. So Pfizer, Moderna, move up to Bloomberg coronavirus new information. Yeah, Moderna I'm staying away from, but Pfizer I think has a more diversified portfolio. It has a bunch of drugs that are really making an impact on especially cancer patients. They have a lot of treatments for those folks that are dealing with it. So I think I already got RDW on the board there. Spotify. So I like Spotify, but they're too expensive. We'll take a close look and I'll tell you what I mean. T-Mobile has been rocking. Man, what's up with T-Mobile? They're always like, they went from being a smaller player like 10 years ago to being like, I think they have a higher market cap than both AT&T and Verizon. So we'll take a peek. All right, cool. I'm getting down to the bottom of the list here. GEV, we went over that. Redwire is... So Redwire is the Broadcom of space companies. It's a cluster of acquisitions supplying foreign space companies with equipment. Cool. Sounds interesting. Thoughts on Lockheed Martin, right? LMT. Take a peek. And I had a conversation with another investor today that I'll bring up when we cover that. China's been working. Yeah. So Baba's been rocking, man. Baba is one of my favorite stocks right now. And then Jerry Asan. Man, Lunar went up 410%. Yeah, I remember seeing that. Crazy. Awesome. Mike, what's up, Mike, the dividend investor guy? How are you, sir? So we want to go over CPRX, U, NVO. Let's take a look. And then we've got interesting. Exactly. All right. So right there, that's going to be the cutoff. I'm going to fly through these and then call it a stream. You guys are awesome. We're 50 strong. We've been going for, I guess, about an hour and 29 minutes or so. So let's roll. All right. I'm going to start with Mike, the dividend investor, guys, one of my buddies, and he is one of the community members. So I'm going to crank through his list real quick, and then we'll get to the rest of them. So Catalyst Pharma has been doing good generally, but it has had kind of a period of just being flat. For the 1 year, it's good, but it's kind of been flat. And they're going to announce February 26th. So they're going to announce next week. We'll see how they come out. This is a small cap, and they're growing really nicely. They have to show growth in order for them to keep rising in value. They have good growth there. Catalyst has a good portfolio of drugs. So long as they come out with the right growth, this stock, and assuming the market's in a good place, it should do well. It should do well. Forward P is 16. They're growing really nice. So forward P is good. It's a strong buy discount of 49%. I don't see any recent news. And when I look at my valuation of Catalyst, I have a 56% discount. I like their cash flows. I like their growth. Really good little company in pharma, high profits. Catalyst is a winner for me. I'm making money on it. I own it. I own a good number of shares. And I think if they just announce what I think they're going to announce, they should do well. For the year to date, these guys are still okay. They're in the green. Over the 1 year, they're up nicely, but they've kind of hit kind of a flatter period here. Earlier in the year, they were just rocking. So go Catalyst. And over the 5 year, I mean, that's what we want. We want a stock to more than double our wealth. So Catalyst looking good. Now we're going to go over you. So Clear Secure. These guys are a security company, but it's a combo. If you go to the airports, you see their service where they give you like an expedited check-in through the gate. And that's one of their businesses that's very easy to see because you could see their people and their equipment. These guys are growing nicely. Over the 1 year, they're up 29, but you could see that they were just cranking. Then they came back down. Over the year to date, they are down 11%. So it's not doing all that great this year. It's a small cap, 3.28 billion, 735 million of revenue. Forward P is 18, not too bad. They pay a dividend of 3%. Very good. 45% discount according to analysts. And these guys have been growing nicely. Looking at the quarterly, they're still growing on the quarterly. So they're growing a bigger and bigger number. That looks good. Let's take a look at their margins. So gross margin is 63%. It's very good. Profit is good. Free cash flow rate is very good. 32%. Free cash flow is 240 million. I think I do have a valuation on these guys. And I don't. I stopped following these guys. So based on 240 in their growth rate, yeah, these guys, they're worth $4-5 billion easily. Let's take a look at their balance sheet. They have 544 million of cash and 123 million of debt, and they produce positive free cash. So that cash is going to keep growing. Yeah, this is like a $5 billion market cap company that is being discounted quite substantially, and other analysts agree. So this is a good one. It's small. It's pretty recognizable what they do. They do security. They do both the airport stuff, among other things in security. So that's an interesting little company. 5-year, man, why hasn't their stock done better? I don't know why. I mean, these guys are putting up good numbers, growing nicely. Yeah, at some point, I mean, it seemed like the market recognized, hey, this is a really good stock, and then it collapsed. So maybe there's some news around here that we have to go back and revisit. So that's you. It looks pretty good. It looks like the fundamentals priced the company much higher than the current market cap. NVO. So these guys received good news that, hey, their patents are going to be enforced, and they have enough manufacturing ability to be able to produce the weight loss drugs that they have a patent for. It's a big cap, 391. Is this US dollar? Yeah, US dollar. And their forward P is 22.75, dividend 1.5. Now the 1 year doesn't look good. Year to date looks okay. Man, look at these drops and rises. The healthcare industry has not received the love that it's received in the past. And these guys crank out cash and so forth, as I'll show you. Analysts think it's highly discounted. Look at that, man. So revenue 290, it grew nicely, 25% growth on a big staggering number. And it accelerated in the last quarter. Okay, that looks good. Why is the market selling this off? So free cash flow 70, is this right? 73. Is this in dollars or another currency? No, this is in DKK. So DKK. So 0.14, 14 cents on the dollar. So this 290 is about 30 billion in revenue. Okay. Still very good growth rate on 30 billion. And then free cash flow 74 times 14 is going to be about 7. It's going to be about 10 billion. So $10 billion here, and I'm going to go to a different. So 10 billion, their market cap is, this is in US dollars, right? Yeah. So it is a little hard to get to this value for me because 10 billion and they're growing at that rate. I would price them at like 300 billion and they're above that. When we look at their balance sheet, they do have net debt of about $10 billion, 10.6 billion. So this one seems a little overpriced to me. It seems overpriced by about 20-25% based on free cash. When you look at earnings per share, only 3 analysts look at it. That's a surprise because this is a big company. But earnings per share is probably, it's going up nicely. This is the DKK again. So that 27 turns into about $4 per share. And it is going to grow. It's growing nicely. But it just seems like it's an expensive stock. The growth rate is good, but not good enough to raise the valuation of the company. Okay, so I don't know if I'm valuing Novo on this here. I don't think I am. Oh yeah, here it is. So fairly priced. It's overpriced on cash flows. Here's an estimate. And then the earnings per share give it a better value. So it's fairly priced. Novo Nordisk. I'm not excited about this because it's kind of a big business. Did they pay a nice dividend? No. So it's out of country. And I think I did raise the. So in my valuation, see, it's out of my home country. So I actually want this to be a little bit higher. So, yep. That's where I would value the company. There's other options within pharmaceutical that I think give me better risk reward, both big, small, medium, whatever you want. Healthcare, in my opinion, has been left behind and it's discounted. So shoot me a message on Discord, Mike, if you want any more info on that. Glad to provide it. All right, let's keep moving. XYZ. Oh, Block. We went over Block this morning. It really tanked. Oh, man, brutal. And the conclusion that we made was this is still overpriced. It's discounted based on earnings per share, but they're just not really creating a whole lot of excitement. 10% growth is okay. And I guess that's keeping up with like PayPal. But what's not keeping up with PayPal is free cash flow. Free cash flow is really low. And it was really a trouble spot last year, and actually 2 years ago, as well as in 2022. So this lack of cash flow is a big problem. And I can't support their, I think I could probably value the company at 30 billion or so, but no more. Yeah. It's probably worth about 30 billion based on their growth rate. And that's Block. We went over it this morning. It really dropped today. The market just did not like what they had to say. They did not excite the market. All right, so that's XYZ. Lunar. Let's go to the moon. Let's go to the moon. Fly me to the moon. Whoa, down 8%. What's going on? Wow. Wait, am I looking at the right one? Up 64%. Did these guys just IPO? Looks like that way. Yeah. So this is $2.73 billion market cap. Revenues $204 million. They are losing some money. These guys design, manufacture, operate space products, services in the United States. So these are the guys you were saying are going to fly to the moon, right? So the moon mission, yeah. Wow, incredible. That sounds really interesting. I'm a fan of space travel. Just I'm not going to travel in space. I'm too chicken. Every time I think about how much risk these astronauts take, I'm like, yeah, I'll pass. But I'm a fan. Strong buy, but it's priced too high, according to analysts. This is going to be do you believe in this company? Do you think they're going to be the next Tesla, SpaceX? And if you do, then you'd probably invest in this company. But fundamentally, I'm not expecting these guys are going to support their price. Now, cash negative. I don't know enough about space travel. But what I do know is, my observation is that it's really risky. You can have one failed mission and then these guys are done. You can have a couple failed missions and you got big problems. And even the space shuttle, if you remember the space shuttle, I think we lost 2 shuttles in that program. And that's with, billions of dollars being spent. It's really risky. So if something goes wrong, it's going to be a big loss. There's a company by the name of Viasat. They do satellites, and they launched the satellite. They launched it up. They went to turn it on. The darn thing didn't turn on. And it was like a $600 million loss, like that. Boom. Write that one off. That's a big loss. And stuff like that happens. And when you're dealing with space, you can't send AAA up there to tow them back home. No, you're dealing with a whole different environment that is it's unforgiving. So I hope their mission to the moon goes great, but I'm not an investor in this company. I'll be a fan. I will be a fan of Lunar and watch from the ground in my nice, safe living room when I watch them on YouTube. Fubu is being acquired. I forgot who was going to acquire them. What's going on here? So they really came up to I think the price that they were going to be acquired at. And who was going to acquire? Disney was going to acquire them. Okay. So they went up to the value that Disney was offering. It's interesting that it's kind of faded back down a bit. Analysts are still saying, hey, it's priced 8% too high. Really? Well, Disney's paying for it. So I think they're worth what they're worth. Market cap, 1.28 billion. And these guys, it's not really, I feel like I'm analyzing a company where Disney's already said they're going to pay for the company. So the company is worth what is up here, 1.28 billion. Did somebody bring this up because the deal may not be done? So Elizabeth Warren, of course, she's going to speak against a merger like that or acquisition. Yeah, I'm not agreeing with her. What are you going to do? Like, Fubu is probably going to go bankrupt. So Elizabeth Warren, she had her way. You got to let Fubu go bankrupt because that would create a more competitive environment. Wrong. If you have this competitor go out of business, that's one fewer competitor. So it just doesn't make any sense to me. So, but Fubu is, fortunate investors. I think when you were cruising along and investors were invested in at $1 and then boom, tripled their money overnight. Congratulations, Fubu. So I'm going to crank through AT&T and T-Mobile in combo. AT&T has been doing well, 57%, and it's been rising. Look at that. This is a safe stock. Now that we're seeing technology kind of sell off, people are looking for a safety stock, AT&T. Everybody needs cell phone coverage. Everybody needs that. So these guys are working right now. These guys did not work for a while. It was a pretty rough road that they covered. But really over the last year, they got it together. I don't like AT&T because they have too much debt. And they do have a nice dividend, but the debt worries me. But they're operating well. I mean, hey, my hat's off to them. They're rewarding investors for the last year. For the year to date, it's a really good safe stock for investors to rotate into. So my hat's off to AT&T. Good job. Do I think they're worth this amount? No. I think they have too much debt, and they and Verizon carry too much debt. Look at the debt level, $142 billion of debt. 42, excuse me. And their market cap's 191. Okay. So in my book, this market cap, you see companies, quality companies, like I showed, that don't have any debt. They actually have a surplus of cash. That's a strong business. When you have to have this much debt and you're not able to pay it off, that debt becomes a huge expense on your income statement and stays there until you pay it off. So I don't like AT&T because of their debt. Let's take a look at T-Mobile and see they're better. I haven't looked at T-Mobile in a long time. So T-Mobile, $302 billion. These guys used to be like 50 billion, and now they've surpassed AT&T. So these guys are up 63%, 5-year up 166%. This is the best run company in this industry. Do they have a lot of debt? I don't know. Let's take a look. Yeah, they do. They have $109 billion of debt. They have to pay for a lot of equipment to be put in the field, cell towers, all kinds of equipment. So I don't like that about this industry. I'm not an investor in this industry. They pay a very small dividend. According to analysts, they're priced at a premium, but they're a strong buy. I guess they're a safe stock, up 20% because investors are flying to safety right now. So this is a place where you can go for safety, or you can go to T-bills and bonds and stuff like that. But I stay out of this space because they have too much debt. When you look at an income statement, I'll look at AT&T to prove the example. And you look at, this is what the company collects from customers for the services they render. And you have a cost of revenue, wonderful. You have a gross profit. Then we come down here. This is an interest expense. So you're paying all this interest. And you see how it's just a big staggering number every stinking year. It's a lot of money. That's like 2% of your revenue. Or if you look at profit, that's almost 10% of your profit goes to just pay debt interest. So no, thank you. And it's risky. These guys get in trouble. Those debt collectors are going to, cave in on them, and they will have to, cut pieces off the company, maybe even, file bankruptcy. Companies with higher debt have a higher risk of going bankrupt. All right. So we knocked off AT&T and we knocked off T-Mobile. PAGS. Let's go over PAGS. Now, PAGS is a fintech company down in Latin America. They are doing, really well. 28% year to date. Very nice. $2.5 billion in market cap, revenue 3.23. This came up, and this other investor, Tomas, I think he's in this stock, and he's got to be happy with 28%. Forward P is super low, 5.89, discounted by 66%, according to analysts. When we look at their revenue growth, now this revenue isn't incredible, but they are growing. And this is in BRL. This is 0.14, I believe. So this is about $1.2 billion. I should look at this number. Sorry. 17.605. So that's going to be about, I'm going to say about 2 billion or so in revenue, growing at 14.87. So the cash flow hasn't been consistent. And I think this was my hang up with this company. See how it's negative in the trailing 12 months, positive before. I mean, if they were positive and they had an upward trajectory, yeah, I'd be on board. This is a good company. If we look at the quarterly, what did they do in the last quarter? So they lost cash. So they burned cash. So something's going on. They had to invest or burn some cash for some reasons. And I think this is one where the accounts receivable balance, they kept carrying a very high balance. Yeah, this number. See how it's a negative? That means it's increasing. Well, that's a problem. That means your customers aren't paying you. At what point do you have to write this off? That's a very bad situation. Okay. That was one of my concerns in this account, that I would want that explained. Why is the accounts receivable line so negative and staying negative? That means your customers aren't paying you. So no thanks for me, but it's working. So I'm happy for my friend Tomas, and hopefully he keeps making lots of money. Over the 1 year, it's down. So he picked it up at the right time. Very good. And hopefully they correct their financials and they get that accounts receivable line figured out. For me, it's a pass, but that was my opinion. And the market's going to do what it does. CEG. So Constellation Energy. I hear so much about this business. And like the other utilities, it's going to be worth so much money. $89 billion in market cap. Again, it's really rocketing up. Wow, look at that, 468. So again, when we go to their income statement, wah, wah, wah. Why are they not growing? What am I missing? If the data centers need all that power, wouldn't Constellation Energy be able to raise their rates and charge them more money? What's going on here? This is a riddle that I can't solve. That's why I'm scratching my head going, the data doesn't support the story. Why am I seeing this type of appreciation without the fundamentals at least lagging by a year or two? They're just there's no correlation between true value, which is growth in revenue, cash, profit. This one follows suit with the one we saw around GEV. It's following the story. These are going to be worth a lot because the data center is going to need power. Okay, Well, we don't have killer AI apps yet. So when's that going to happen? In a year, in 5 years, ever? And once that happens, are we truly going to need all that power, or will another DeepSeek like company come in with a better technology that doesn't need that power? Potentially, that's where technology ends up, is better technology. So we will see. For me, this is highly overpriced, as well as GEV. I put them in the same category. RXRX. This one I have no idea on. I think this is Recursion Pharmaceuticals. Operates as a clinical stage biotechnology company, engages in the decoding of biology integrated. This one's outside of my zone of knowledge. It's down year to date. It's up. It's a small cap. Revenue, just 65 million. So this is totally somebody who knows this science and can probably make a judgment call that, hey, these guys have a chance of really being something. Could probably make a judgment call, but I disqualify myself from being able to provide an opinion on this because I don't know. I do not know. I would not invest in this because it's out of my zone. I can understand a pharmaceutical company. I did work at a pharmaceutical device company as an accountant, but I was an accountant. I was like, I could tell you manufacturing process. I could tell you that the expense that goes into discovering the drug, testing the drug, going through FDA approval. I can tell you all that. But once you get into this type of like true science, it really takes, somebody with a master's in biology or a PhD in chemistry to really understand this and say, hey, this is going to work. That's not me. So good luck with this one. I can't provide an opinion on this one. So good luck with it. Grr. What is Grr all about? Gorilla Technology provides solutions in security, network, business intelligence, Internet of Things technology in the Asia Pacific region. 557 million in market cap. It is rocking the world. Look at that. It's down 79% from its IPO. Remember I was talking about IPOs? IPOs crash and burn, and then they come back and build themselves up to its value. This one here is really rocking. It is got revenue of 79 million. Okay. PE ratio of 13.25. It's overpriced by 40%. So what's going on here? So really good growth because they're tiny, and but revenue growth, we're going from 64 to 79. So why is it showing 425 here? That doesn't make sense. Okay. I'm not seeing numbers. So I'm not getting the right data because the numbers here are from June 30th, 2024. So this company, I'm not going to be able to cover because I don't have the data set. And right now I'm cranking along. I'm coming up on 2 hours, and I'm going to need to go as soon as I finish this list. So I apologize. I can't cover this one. I don't have the right data. I'd have to go to their investor page and kind of work through their numbers. And I'm not familiar with this company. So I apologize. I can't cover this one. SN. SN is Shark Ninja, down 7% today. Year to date's up a little bit. Now these guys, they do all the Ninja product? Yeah. Now they make cool products, but they break. I've owned a couple of them, and I didn't like their quality level, but they do have a good price point. I think that's why they break so quickly. So that's what they do. They have products. I think they're probably discretionary products. 14.4 billion, 5 billion of revenue, forward P of 21, and they're growing really well. That looks pretty good to me. Okay. Let's look at their profit. Free cash flow. It doesn't show up for the previous year, 157 the year prior. Gross margin's pretty good for a consumer discretionary company. And profit margin's 8%. So they grew the top line by 30%. That looks good. And they had 100. So if I grew that by 30%, I get to, let's call it 200 million. What kind of debt are we dealing with? So they have $557 million of debt. So these guys are discounted. If you consider that they're growing really well, they make a product that's competitive in the store, and they're probably worth about $20 billion in market cap. So there is a discount available there if you look at the free cash flows. And it looks like the forecast, 9 analysts are covering it, and they believe it's discounted by 19%. The revenue that's expected there for 25, 16%, then 11%. Very good growth in earnings per share. So looks pretty good. The Shark Ninja. And their products are very well designed. I just complained about the quality level because I had a blender that didn't function after, a while, and had to switch over to a different brand. So the Shark Ninja. Good luck with that. SoFi was rocking last time we looked at it. It performed so well for the last couple of months of the year. If you look at what it did here, just took off. But for the year to date, it's kind of mellowed out. So if you were in SoFi in September, you're a happy camper because it did really nice. And now it's settling down a bit. So interesting. $16 billion market cap, 59 forward PE. Now, my choice was Robinhood instead of SoFi. I think SoFi has an interesting business. I just don't think it's as valuable as other alternatives like Robinhood and others. So that's where I've invested my money. But I can't argue with anybody that invests in SoFi. I think it's a growing business. It has a very strong brand now. Free cash flow, no free cash flow. But these guys operate more like a bank. And when we look at their book value, so their book value hasn't grown a whole lot in the last couple of years. So that is a concern. This should be growing, especially since they're a new bank getting, many, many new customers. That should be growing. It should be growing substantially. So that's SoFi to me just doesn't look good enough. I think I could take less risk and get a very good return. This stock is up 72%, which is good, but it's hit a flat spot. It wasn't performing very well for a while, right? And you see how it came out of the gate. Boy, it was going to be really valuable. It just tanked. It kind of had a rise, fall, and now a new rise. So we'll see where it goes. But for me, it's a pass. For other investors, they're excited about it. I hear about SoFi quite a bit. It's requested a lot. RDW. Redwire. Redwire Corporation provides critical space solutions and space infrastructure for government and commercial customers in the U.S., Europe, and internationally. The company provides avionics sensors, including star trackers, sun sensors, critical for navigating control spacecraft. All right. Wow. That's incredible. So these guys are a really small cap, 1.2 billion, revenue 298. Okay. So did they get awarded like a contract and that's why their stock price just went out of control? Yeah. So they are providing something that's going into the space programs that now they've been privatized, right? You've got, of course, the government through NASA, and you've got SpaceX, and then is it Blue Origin or whatever Jeff Bezos' company is. So you have those. These guys seem to be producing product that goes into that particular ecosystem. Revenue growth looks really good. Okay. They do have a gross profit, looks good. But they have, so operating income, so operating expenses are a little bit high. They don't have the scale to be profitable yet. So space is not a place that I invest a whole lot of money. This does not have the fundamentals for me to be an investor. This is another one where if you believe in this company and you think they're going to be they're going to be big, then go for it. But I can't get there fundamentally. I can't get there and show you, hey, this company is producing this kind of cash flow, earnings per share. So the valuation based on those numbers is this amount. I can't get there. So this is all, if you understand space, you understand what these guys do, you understand how they fit into that whole ecosystem, and you can assess and make a thesis based on that understanding, go for it. That's not me. I'm disqualifying myself from being able to do that. So good luck with RDW. All right, Wingstop. So I don't like restaurants. This is $6.7 billion company. These guys have been opening new restaurants. It's down 17.66%, down 27.8% over the 12 months. They grow here, right? You see this growth, but I would double check and see if they're opening new stores, which could be one of the reasons why their revenue is growing. When we look at that type of growth, looks really good. Now, free cash flow is decent at 105 million. When we look at their gross profit, 48%, and then net profit of 17, that's very good. So these numbers look good. So 105, they're growing really nice. Yeah, they'd be worth like 2 billion in my book because the cash flow is like 100 million. So that's the best I can do on a restaurant stock like this. And one thing I forgot to check was, do they have a lot of debt? And yeah, they have about $1 billion of debt. So this one's a pass for me. Not enough cash flow. And I just don't like the restaurant business. When you have restaurants, you have a lot of employees, a lot of retail locations, just a lot of undesirables with a lot of risk. I'd rather buy into a stock that's lower risk, like Meta. Meta, they don't have any locations. You go on the internet to get their product, and they make tons of money. That's the kind of business I'd rather invest in. So Wingstop's a pass for me. I can't get to this valuation with cash. And earnings per share, analysts are saying that in 17 cover it. They're saying, hey, it's worth a lot more based on earnings per share. And it looks like it's expanding. So that looks good. These numbers look good, but the free cash flow doesn't. And that's what I use is 66% of my value on that model that I showed earlier. So this one's a pass for me. Good luck with Wingstop. Spotify, my favorite music streaming service. I've been a customer for a long time, but they're just too darn expensive. 123 billion. So when I buy Google Alphabet, I am getting YouTube in concert or as part of that stock. And I think I'm getting the YouTube business for a better price than I get the Spotify business. Spotify is growing nicely, and they are a streaming service, so they're very, very profitable. Their cash flow is 2.2, call it 2.3 billion. It hasn't been all that consistent. And their gross margins aren't as high as I thought they were going to be. Okay, I am a little surprised with that. Now, they are a euro company. So euros are about 1-to-1 to dollars. So we can just assume these are dollars. So this growth rate is good, but not great. And the company is pretty good size, 15.6 billion. And their cash flow is not very consistent. You saw that it's going a couple of different directions, and it finally landed at 2.2 billion. And on that number, if I multiplied that times let's say 20, I get to like 44 billion. And that's well below their current market cap, which is 123 billion. So there's a big gap there when we look at free cash flows. Now, sometimes some of these stocks that everybody knows about, they can get their heads around, a lot of retail investors and just about everybody can say, oh yeah, I know what Spotify is. That's the best streaming service. That's fine that it's recognizable, but that's not a reason to overpay for a company, right? So I'd rather everybody knows what Meta is, Facebook, Instagram, WhatsApp, and that gives you a really good, risk to reward. Everybody knows what YouTube is, very good risk to reward. I'll buy those. This one, I'm a huge fan of Spotify. I listen to this darn thing 5-10 times a week. I listen to it when I go to the gym. So I'm a happy customer, but I value the company. I'm like, yeah, the business is priced too high. So that's what I think about Spotify. So we're going to look at Lockheed. And the conversation I was having earlier was that, the world is, I mean, there's conflict, right? I don't think I'm breaking any news. So having some defense contractors may not be a bad idea. Now, this one here did let me down. I thought it was going to be a good stock, but I tapped out. I tapped out around here. Their last earnings disappointed me, and it disappointed because they had negative revenue. That's a problem. Just a lot of problems with their financials. It was just a big step backwards. Cash flow went down big time. It's like, man, it's just aerospace and defense. This is not like, you didn't know what you were going to make one quarter ahead. It's just very bad execution, and they don't have the margins to really recover, nor can they recover their revenue. So in general, I was really disappointed with the last quarter and felt that the stock was just overpriced after I consider that I had to scale back the fundamentals. So I sold my Lockheed Martin stock probably about a month ago, maybe a little longer. I'm glad I did so because it continued to slide and sell off. I think this chart shows it better. And yeah, that's Lockheed. I think it's a good idea to have defense stocks, but I have to admit that I haven't had a lot of success with them, and I haven't bought a lot of them because I always find that there's other investments that just look far better. And these guys just, they have good valuations, 100 billion, but will this double in 5 years? Probably not. It'll probably go up like 30-40% over 5 years and pay a dividend. That's not good enough. I'd rather try to find a stock that's going to double for me in the next 5 years, if not sooner, like a Robinhood doubled in 6 months. So Lockheed is a pass for me. It is a stock that I would sell, actually sold it. So it's not, I don't have to pretend. I can tell you that I sold Lockheed, sold out of this stock. So that was my comment on Lockheed. We're going to go to ASAN, and then we're going to end the show with Alibaba. Asana. What's Asana about? Asana, together with its subs, operates a work management platform for individuals, teams, leads, executives in the United States and internationally. Its platform helps organizations to orchestrate work from daily tasks to cross-functional strategic initiatives. Okay, so this is a software company, 4.76 billion. Now, I've never heard of this company, so let's take a quick peek at what they do. So they do this like a collaboration suite where people can use this platform to connect work and automate workflows. So this is supposed to be kind of like, hey, it's going to do some of these tasks for you already. So it's putting AI into a business process, which would then reduce the amount of human time that we'd have to be put into that process to complete it. All right. Interesting. It's up 11%. I would have thought this was like screaming up. This is AI. This is a use case of AI. So 4.76 billion. It's not making money yet. One thing where are these guys located? So they're in San Francisco. So this is kind of like, when I was talking about AI doesn't have killer apps, this is going to be the face of AI when you can have companies like this actually provide AI that's going to do something, that's the AI that is promised. It's going to do something for us. It's going to make our work lives better. It's going to be more efficient. It's going to do things automatically for us. So this is a $706 million company. It's growing by 12%. Burning cash. They have very high gross margins, software company, but they're losing money. They're not big enough to cover all their expenses just yet. So I want to look at the quarterly and see if things are really improving in the latest quarters. So this is growing at 10%. Okay. Pre-tax. Yeah. I mean, this looks like an interesting business. I think the business, if it makes it, it's probably going to be an interesting business. But I think there's maybe a year or 2 years left before they get out of the risky zone, because they could still kind of crash and burn. What if one of their competitors, a bigger competitor, beats them to the market and takes away the market share? That can happen. They have more cash than debt. Very good. So this one might be a good stock to watch, but I'm not ready to pull the trigger on it. I'm not seeing enough value, nor am I seeing them. They're making the turn to being profitable and really building their value. I'm not seeing that out of this company just yet. All right, guys, I'm going to cover Baba now and just end it. I've been going for 2 hours and I got to take off. So Alibaba, this stock has been working. It's been working year to date. Beautiful, man. This is just a great chart. So Alibaba for a while didn't work. Obviously it was cranking. Charlie Munger was like, Alibaba's awesome. And then boom, came down, never came back up until a year ago. The annual chart really shows that the company's worked. It worked in the third quarter of 24, and then it faded. Now it's back. It's back with a vengeance. So it's really working. Their earnings were really solid. They're growing in AI. They're growing their data center to provide AI services in Asia. They claim that their AI large language model and the AI platform is more efficient than the American versions, which is interesting. They also talked about how one of their new data centers is down in Mexico. So they're providing cloud services down in Mexico, I'm sure, to Mexican companies. So they're growing around the world. This company is making it happen, and it's become it was already a really valuable company, and now it's being recognized as a really valuable company. So I don't know that it's going to fade unless the market really sells off. I think it's been really sold off. So, I mean, just to get back to its all-time high, the stock will double again, which would be awesome. So Baba's really working. I think Baba, let's see where my value on Baba is. It's discounted by 12% because the stock price has really risen. And I just updated numbers on the 20th, just a couple of days ago. So I really like their earnings. Good job, Alibaba. For me, it's a buy. I really like the momentum of the company. And I like that this Chinese company is really being recognized. So that is a stream. Thank you so much. I am sorry if I didn't get to a stock that you put in probably the last 30 minutes or so. I've got to get going. I've been streaming for well over 2 hours. It was awesome, but I got to go. And I really appreciate everybody attending. This was a really well-attended live stream. Thank you so much. And let's keep our fingers crossed that this market isn't going to be brutal. It isn't going to kick our butts next week. I hope we see better days ahead, because today was a bad day. Yesterday was a bad day. What I don't want a bad year. I don't want this thing to turn into, this was the beginning of another year like 2022, which was just a long string of, down days like this. Cause you imagine, I mean, you guys were probably there with me investing, it was a year where we took our lumps. So I'm hoping it's not that. If we have a good correction, let's just get on with it. Let's correct it. Let's get stock prices back to a reasonable amount. Let's rotate out of some of these really expensive industries and sectors and get into some of these industries that have been left behind in the past. So we'll see where it goes. I'll stream as often as I can. Everybody have a nice weekend. Thank you so much for joining me. Really appreciate it. You guys have a great weekend. Take care.